Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial mumbo jumbo so you don't have to. And today we have a special report from dMY Technology Group Incorporated. Get ready, we are about to uncover why this company is basically asking for more time and paying for it. So what is this Form 8K report all about? Think of it as a company's way of saying, hey, something important just happened and you need to know. It is a current report that tells us about specific events that shareholders might find important. Now, dMY Technology Group Incorporated, which we will call dMY, is a company that is involved in some interesting financial activities. This company is a bit of a special case. It is known for being a special purpose acquisition company or SPAC. This means it is essentially a shell company created to raise money through an initial public offering or IPO without any commercial operations. Its main purpose is usually to acquire or merge with an existing company. The big news here is about time. It seems dMY is stretching out its deadline to find a business to acquire. They are in a bit of a race against time to make a deal before their funding runs out. So on the 26th of November of 2025, dMY decided they needed more time to figure out their big business move. They approved an extension to find a company to buy or merge with. This is not just a small extension, it's the 23rd 1-month extension they are taking. We are talking about potentially going all the way to the 29th of December 2025. This means they have used up almost all the extensions allowed. It is like they are on their last few weeks to make a major decision. Now here is where it gets interesting. To get this extra month, they had to put more money into a special trust account. This time it was an additional $50,000. This money usually belongs to the investors who bought into the SPAC initially, so they are essentially paying to get more time to find a deal. It is a common practice for SPACs, but it shows they are serious about needing this time or perhaps struggling to find the right opportunity. Let us look at what dMY is actually made of in terms of stock. They have different types of shares. There are units which are like a package deal, including one share of their class of common stock and half of a redeemable warrant. Then there is the class of common stock itself with a very small par value of just 1/10,000th of a cent per S-hair. And those warrants we mentioned, each whole warrant gives someone the right to buy a share of that class of common stock at a set price of $11.50. These are important because they represent potential future ownership and they have value associated with them. These different types of securities are traded on the OTC Markets Group Incorporated. This is an over-the-counter market, which means it is not a big formal stock exchange like the New York Stock Exchange. The report also tells us that dMY is an emerging growth company. This means they are a relatively new company and benefit from certain regulatory flexibilities. They have also elected not to use the extended transition period for new or updated accounting standards, which means they are following the latest rules pretty much right away. Signing off on this report is Harry L., who wears many hats at dMY. He is the Chief Executive Officer, Chief Financial Officer, and Chairman. This tells us he is a key figure leading the company's strategy and financial operations. The report was dated the 28th of November 2025. Now let's talk about what this all means. dMY is essentially a company that raised money from investors with the promise of finding a business to merge with, and essentially make it a public company. They have been doing this for a while, as indicated by the many 1-month extensions. This latest report shows they are still in that process and are using up all their options. The fact that they are paying $50,000 to get an extra month is a sign. It could mean they are close to a deal and just need a little more time to finalize it, but it could also signal that finding the right target is proving to be difficult and they are running out of time and runway. Investors who are part of these SPACs are often hoping for a successful merger that will increase the value of their investment. If the SPAC fails to find a target within the allowed time frame, the money often gets returned to investors. So while there are no specific financial tables in this particular announcement, it's all about the timeline and the cost associated with extending that timeline. It's a critical juncture for dMY and their investors. They are in the final lap of their SPAC journey, and the next few weeks will be very telling about whether they can pull off a successful merger or if investors will get their money back. The strategy here for the company is continue to hunt for a viable acquisition target while managing investor expectations and the associated fees like the $50,000 they just paid. What is my take on this? Well, dMY is in a common but often tense situation for SPACs. The consistent extensions suggest a persistent search, but also potential challenges in identifying a suitable and valuable acquisition. The $50,000 payment is a concrete cost for this extension, showing the financial implications of a prolonged search. It signals commitment, but also the pressure building as their options dwindle. The company's direction is focused on that singular goal of a merger. Their strength lies in their access to capital from the IPO, but their weakness is the ticking clock and the difficulty of finding a good deal in a competitive market. The biggest risk is not finding a target at all, leading to dissolution and return of funds to investors. The key opportunity is striking a successful merger that brings a promising company to the public markets. Right, that is our breakdown of dMY Technology Group, Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.